Hello, everyone. How are you guys doing today? Good to have you all here. I was going through the attendees just a second ago, and I'm seeing a lot of new names. So welcome, everyone, if you weren't here yesterday. Seeing a bunch of people that have come back from yesterday, so welcome back, as well as people in our live trading room. So a really great group today. Very excited about that. Got a lot to cover today, so I hope you're ready. Hope you grab some coffee. I know I just got mine to get ready, so Have a lot to cover. Going to do a quick recap of what we did yesterday and what we talked about. Yesterday was more of that introductory period where you get to know Jeff and I a little bit about our backgrounds, and then get to see what we do as far as our live trading rooms every day. So every day we're going to be talking about stock picks. We're going to be going over our futures charts and giving you a lot of nuggets that you can take moving forward to become better traders yourself. So going to be doing more of that. I know I just touched on the pre-market routine yesterday. I definitely want to go into more detail today on that, as far as giving you exactly what I look at, more of the details, so you can get a feel of how you're going to prepare for the market open. I also know there were a lot of questions yesterday as I was going through that pre-market routine. So if I didn't answer your questions, feel free to throw them in the chat and I'll go back and forth and keep an eye on them as well. So going to start with the pre-market routine. If you took a look at the PowerPoint that we sent out to everyone, you'll see this slide right here is going to give you a good pre-market overview of what we're going to be touching on for the day. So just quick overview, going to be taking a look at what's in the news, big picture perspective of what other traders are looking at and basing their trading decisions off of. So that's something that we always start off every day with our pre-market routine, is the news, again, to start big picture and then to start scaling down to the smaller time frames and then getting into the charts. So starting off with the news, then we'll take a look at economic reports. A lot coming out today. If you guys do look at Econo Day, you'll see there's a ton of reports coming out, and that did come out already. So we definitely want to be keeping an eye on those, especially because these cause a lot of volatility in the market. So when there's a lot of volatility, we need to be prepared for them and not be afraid of the volatility. Also in these slides, going to include a tip of the day. Something that I wanted when I started learning about this is just getting bits of nuggets that I can take and help me with my trading moving forward. So you'll see here, this is one of the main things that I want to talk about today, is why we want to be a bit more on the defensive side versus wanting to necessarily start buying right now. And if you'll look in the bottom left corner, you'll see that before an FOMC announcement, the markets tend to rally 1.5% to 2%. And then after the FOMC announcement, we typically get a pullback of 1.5%. So very important piece of information to keep in mind here, because if you did look at Econo Day, you'll see that the FOMC announcement is tomorrow. So big piece of information. We are going to be expecting that pullback starting after tomorrow. So something to keep an eye on there, and another reason we want to be on the defensive right now. So I'm going to switch over to another screen to show you how I set up for the day and looking at the news. So here's typically what I start with, is going over to Market Watch as one of the main sources that Jeff and I look at each morning. It's a good resource as far as a lot of people look at it to get their news, to get their information. So we want to be keeping an eye on it as well. When you're looking through the news, really all you need to keep an eye on is what's on the main page, what's in the bold headers, the main print, because really this is what most people are looking at. A lot of people are getting ready for work and they don't have the time to necessarily read the full articles. So really to keep in mind is just what's on the main page. Scroll down and then see whether you're getting a more bearish perspective, more fear instilling news out there, or more bullish news and more articles saying to buy right now. Get that perspective and the feel as far as what the media is portraying, because they do control the public opinion, and then traders base their decisions off of what they're seeing. So did that this morning. If you took a look at the PowerPoint again, you'll see that I mentioned that was seeing a lot more bearish news out there. So a lot of times I'll say with bearish news, we want to be looking for buying opportunities to buy the dip in the context of an uptrend. But just one thing to keep in mind as far as today is that we are expecting a lot of volatility in the markets with the FOMC announcement. And as I touched on yesterday, it being an inside day. So a lot of nuggets that I'm throwing at you right now. I'm sure it's a lot. I'm going to try to explain everything as I go. And again, we're going to be having a pre-market routine full course where you're going to get a full explanation of everything and going more into all these details. So Market Watch overall pretty bearish. Similar picture, another one of the sources that we look at is Yahoo Finance, very bearish as well. You can see again, just looking at the main headers is the main thing that you want to be looking at. We can see here stock futures mixed as investors wait tech earnings. So this is the big one as well, as far as a lot of earnings coming out right today, tomorrow, and when earnings come out, this is where we can expect even more volatility in the markets. So everything I'm saying and what you're hearing as far as FOMC announcement tomorrow, we have all the stocks having their earnings coming out this week, a lot of factors that are playing into the reasons why we would want to be on the defensive. So keep all this in mind before you start just jump into the charts and trying to place trades. Keep in mind the environment that you're getting yourself into so you can be on the right side of the trades. So that was starting off with the news. Next, going over to Econo Day, as far as looking at what economic reports are coming out. And again, you'll see that I included this in the PowerPoint deck for you, just to break it down so you can see what I'm looking at and which reports are going to be the main ones to keep an eye on. So this is something I look at actually the start of every single week, just so I can get a perspective of what's going on for the day and for the rest of the week. So you're not thrown off as far as not expecting certain reports. You can have a clear perspective of what's going on for the entire week. So today you'll see Tuesday, a lot of reports coming out. If you go to the bottom right-hand corner, as far as finding the ones that are going to be the biggest market movers and the ones that cause the most volatility in these markets, going to be looking at the ones with the red dot. So this is your key right here. The main ones that we look at are going to be, again, the red dot for the market moving indicators, as well as the green ones also can potentially move the markets, and they do give it meriting extra attention. So we got two main ones to keep an eye on, and you'll see today we had durable goods at 8:30 Eastern time. That one was a market mover, so had a little bit of volatility with that one. Case-Shiller Home Price Index, consumer confidence at 10 a.m. Eastern time, also the 10 o'clock reversal. So a lot of things going to potentially be moving the markets today, as far as we have two market moving reports with the red dots. We got one green one. All these reports are what is going to be causing that volatility. So it may be harder to get into some trades and stay in them for long term. So when we have an environment, in a trading environment that looks like this is typically where we say you want to take one-to-one profits, quick bounces, and just be a bit more cautious as far as your trading. Oh, can you not see my screen? Am I on the wrong one? Let me see. Oh, 1 second. I'm sorry about that. How is that? That might help if I'm on the right screen. Better? Okay. Apologies for that. So yeah, taking a look again, as I mentioned before, the main sites for the news, Market Watch, just looking at the main sources, Yahoo Finance, just taking a look at the main pages, and then going over to Econo Day. Here's where I have Tuesday's reports coming out. The key is going to be in the bottom right-hand corner. So we got, again, the red dots here for the market movers. We have the green ones for meriting extra attention. And then as you can see here is where we have these reports coming out that are going to be causing more volatility in the markets. So that's where we starting off with big picture again, starting off with the news and understanding what other traders are looking at, then taking a look at economic reports, seeing where we can expect some volatility in the markets, and then from there we take a look at the charts. So going over to my platform, how I start off each day is taking a look at the indexes. So with the S&P, I'll mention again, as I did yesterday, and hopefully if you guys still have questions on this, feel free to throw them in the chat. But what I do is I mark the prior session's high with this blue line right here and mark the prior session's low with this blue line right here. So what this is doing is it's showing you the price range for yesterday's price action of where the sellers were at, where the buyers were at, in that range of price action. So we can see here that is going to help us determine whether we're considered inside day, meaning that price is within that range still, or if we break outside that range, that's going to be considered an outside day. So right now we can say price is still within this range from the prior session's high and the prior session's low. And as such, we would be considered to be at an inside day. So with inside days, as I also mentioned yesterday, it's going to be elevated risk and choppier market conditions because price is really just going from the sellers up here down to the buyers and back and forth within that consolidated range. While it's in there, again, choppier market conditions, elevated risk, we like to look for more trending opportunities where we can stay with the trend longer. So looking for a breakout to the upside, we'd be able to participate in more long opportunities and buy with the trend going up. Or if we break out to the downside, that's where we'd be looking at taking more short trades as a potential trend to the downside. So keep that in mind as far as inside day versus outside day, just marking prior sessions high, prior sessions low. And if you're still within that range, those are the type of days where you want to take your quick profits and not stay too long in the trades. That's the S&P right there. I'm going to jump over now to the NASDAQ. And you'll see here what's helpful is I organized my layout so that I can just go one by one in order as far as looking at the indexes and looking at some of the other odds enhancers that I'll be looking at later. So going over to the NASDAQ, you'll see similar picture here where we're still inside the prior day's trading range. So there the lines are. Yes, still within the prior session's high, the prior session's low, and we haven't broken out of that range. So again, elevated risk and more consolidated price action until we break out to one side or the other. You'll notice on the left-hand side of my charts is where I have the stocks that are the main movers of the indexes. So this is going to be the NASDAQ, and then on the left are the main stocks that we want to keep an eye on, especially with earnings coming out and these stocks potentially having some big movements. We want to keep an eye on them as the stocks are going to be causing a lot of volatility, and that's going to be impacting the futures markets. So keep an eye on the stocks as well as the futures markets since they do go hand in hand. So as far as setting up your layout, take a look at Apple, Tesla, Microsoft, Google, Facebook, and Amazon, the main ones you want to keep an eye on, and that moves the NASDAQ. Then for the S&P, as I mentioned before, want to take a look at IBM and Goldman Sachs, as they're the ones that are going to be moving the S&P the most. Going over to the Russell, again, just identifying whether we're inside day, outside day to determine if it's going to be elevated risk or if it's going to be a bit easier for us to trade. So here, again, Russell's a bit different picture. On the other indexes, we're making all-time highs, having these strong moves to the upside. Russell, as I mentioned yesterday, is going to be a bit more challenging to trade since we have been going sideways for several days now. So mark the prior session's high, the prior session's low, and here we're still within that range. So again, similar picture across the indexes with it being inside day, going to be elevated risk. And again, with all the other odds enhancers that we know already just by taking a look at the news and the economic reports, stocks having their earnings coming out and the FOMC announcement tomorrow, a whole lot of factors. So we need to be prepared for it versus not doing this due diligence and then being surprised by potential big price movements. So going over to the Dow. So again, same picture, you're just marking the prior session's high, prior session's low, and seeing that we're still within that range. So similar picture across the board with the indexes. So going to be elevated risk. With the Dow, going to be looking at IBM and Goldman Sachs as well. These I like to keep an eye on during the regular trading session to see how the stocks are behaving, since the stocks are going to be moving first, and then the futures market is going to follow what the cash market is doing. So if the stocks, for example, start to rally and prices possibly on the Dow coming into a demand zone and we see the stocks going up, that could be a good opportunity for us to get in that trade and stay in it a bit longer. So we want to see the correlations with the stocks and the futures markets to, again, stack as many odds in our favor as possible. So any questions on that? And apologies for showing the wrong screen before. I think we're good though. So those are the indexes. Going to go over to now the next layout as far as the indexes as a whole and seeing whether they're correlated or not. So the importance of this is that if all the indexes are moving in the same direction, typically we see smoother market conditions and we can stay in our trades a bit longer versus when we see sometimes with inside days, we'll see the S&P going up, we'll see NASDAQ going down, Russell going sideways. This is again where we see a lot of choppiness in the markets. So just want to take a look at the past 5 or 10 candles on each of these layouts for each index. I have it set for 15-minute candles. And then by looking at the past 5 or 10 candles on each chart, you can get an idea of what's been going on in the past hour, hour and a half, and see if there is that correlation across the board with the indexes. So here we can see that S&P has been getting a slight pullback. Same thing with the Dow getting a pullback, the NASDAQ as well, and the Russell also getting a pullback. So overall, you can make the determination that the indexes are all correlated right now, moving in the same direction, which is a good sign for us and another odds enhancer that we can check off and stack that in our favor. Another piece to add to this is that if the indexes are going in the same direction, what do we want bonds to be doing? We want bonds to be going in the opposite direction. So if indexes are going up, then bonds should theoretically be going down. So again, here we have the S&P, the NASDAQ, and the Dow going down. I have the 30-year bonds in the bottom left corner, and you can see bonds are going up. So this actually doesn't happen too often where we do see a lot of these correlations, especially when there's more volatility in the markets, but things are panning out today, as we can see with indexes going in the same direction, all going down, and then bonds moving to the upside, which is what we want to see to make our trading a bit easier throughout the day. The next one to take a look at is going to be the internals. So do any of you guys take a look at any of these internals? The ones that we're keeping an eye on are going to be the trend, the tick, advancing issues over declining issues, and the VIX. So any of you guys look at some of these already? It may seem like a lot, but and we look at all of them holistically and independently of each other to see what each one's doing and to get a feel of the market movements. Okay, awesome. Yeah, so starting off with the trend, this one's a really good one to keep an eye on when the markets are dropping. So if the markets are going down very hard, at what point are you going to want to jump in and start buying? And for some of you, that might be hard because you feel like you're just picking the bottoms the whole time. But the trend right here is actually going to be a huge odds enhancer for seeing when the institutions start to come in and buy up the market as it's going down. So in other words, if the trend is if the markets are going down and we see the trend going to the upside, that's going to be an indicator that the institutions are stepping in and starting to buy up the markets as they're dropping, slowing the market from falling. So typically, if we do get a pullback with this volatility, this is one we're going to want to keep an eye on to see if the institutions are starting to step in and buy up the markets. Going over to the tick, so here we can see that we have two levels here where it's going to be an extreme high point on the tick and an extreme low point where the green lines are. So this is going to be where we're seeing the amount of upticks on the stocks versus the downticks. So typically when we see a lot of upticks in the markets, all the stocks ticking to the upside, we typically see an exhaustion move once it reaches an extreme level because it can't be maintained for that long. So once we see the tick getting up into this range between 800 and 1,000, that's where you see, just looking over to the left, The tick doesn't stay there that long and typically reverts back to the mean, which is between positive 400 and negative 400. So this is going to give you that gauge as far as when price is rallying, there's a big buy program, a lot of the stocks are going up and ticking to the upside. Once it gets to this extreme area up here where I have the red lines, that's where if price is hitting a supply zone or a selling territory, that's where it's going to be a good opportunity to potentially take a short. Same thing on the other side is if the stocks are going down, there's more down ticks versus up ticks, and we see it reach down here at negative 800. Again, that's going to be an extreme point where we would want to be looking at our demand zones. And just seeing how price spends most of its time within this middle range, we want to wait until trades and the tick starts to get to these extremes as an additional odds enhancer. So on a lot of these products, wait for the extremes. On the trend, as I mentioned before, with looking for the institutions to start buying, going to be looking for it to get above 2, which is going to be a lot of buying from the institutions. So we want to follow what they're doing. With the tick getting to a high point of 800 to 1,000, that's a ton more upticks versus downticks. So going to be looking for a potential pullback at that point. Advancing issues over declining issues, similar picture, just measuring advancing issues over declining issues. So if there's a lot more advancing issues versus declining issues, and we get to this extreme point up here, as you can see, it's between 1,800 and 2,000. That's going to be when all the stocks are going up, a lot, or not all of them, many of them and most of them are advancing, and potentially we could be reaching an extreme point where we can expect a pullback. And again, just looking to the left, you can see the majority of the time that the advancing issues over declining issues is within this range. So keeping an eye on this and seeing when it does get to this extreme point is what you want to keep an eye on. That's the main thing I want you guys to take away from this, because it can take a while to learn and to understand what each of these different indicators means, but keep an eye on the markets once they reach these extreme points, either up where we can look for selling to come in or buying. Look at the markets and see how they behave and correlate with each other. And then the VIX, I'm sure a lot of you guys look at this one, but it's going to be the volatility index. So if the markets are dropping, going to be a lot more fear in the markets and more panic. And typically we see the volatility index start to go up. That's going to be your fear gauge. Want to keep an eye on it since a lot of other traders are looking at this as well. And it can give us a clue if there's more fear in the markets or more complacency if the markets are going up. Let's see. Are those the time frames they should be set at during the trading day? Yeah, so these are the ones I keep an eye on. I do 1 hour, 1 hour for the trend, 1 hour for the tick, 1 hour for the VIX, and 30 minutes for advancing issues over declining issues. This is just my setup, but really you just want to keep an eye on where the value is in relation to it being at one of the extremes, whether it's an extreme high or an extreme low. You could set them across as hourly charts and then just monitor them during the regular trading session to see whether they are reaching those extreme areas. You explain trend again. Yes. So Wahid, this one, yeah, I always emphasize this one because it's very important as far as when the markets are dropping, we want to see at what point are the institutions starting to step in and starting to buy the market as it's going down. So if the markets are falling and we start to see the trend move to the upside, that's going to indicate the institutions are coming in, they're starting to buy up the market and slow it from falling so fast. So as the markets drop and we see the trend start to get above 1.5, above 2, this is where we see the most amount of buying from the institutions when the markets are going down. So at that point, start looking for your buying territories, start looking for ways to get in long, because typically that means we're going to be seeing a move to the upside. So hopefully that helps. Got one more for you guys, the pre-market indicator. This is a good one to keep an eye on as well. If you use Thinkorswim, the ticker is going to be QMI. And then for TradeStation, I believe it's going to be QMI.X. What this is going to show you is whether there's more upticks and up volume in the pre-market versus downticks or down volume. The main thing you want to keep an eye on for the pre-market indicator is if we're gapping up or if we're gapping down. So every time we gap up, what that's telling us is that there's more upticks and up volume in the pre-market, which is going to be more bullish sentiment, and just want to keep an eye on that. If we're gapping down, there's going to be more downticks and down volume in the pre-market and going to give a bit more bearish sentiment. So that's a good one to keep an eye on as well. Holistically, this is sort of the routine that you want to be going for as far as broad picture. We start with the news, economic reports, and then zooming in. So I'll do more of this tomorrow. Market's about to open soon, so I'm going to pass it over to Jeff so we can start looking at some trade setups. Jeff, it's all you.
All right. Thank you, guys. Good morning, everybody. Let me get my screens up here. I do need permission from the host to share my video. All right, I think I'm up and going now. Get me all lined up here. Good morning, everybody. All right, let's hit the ground running. Lots of things to cover. As Kaitlyn has been really outlining this morning, is the pre-market routine and what we have happening in the marketplace. As I come out to the larger picture, okay, look, the FOMC meeting comes out every 6 weeks, and sometimes we don't remember it until like, oh my gosh, the FOMC meeting's coming out, okay? But starting 5 days before the FOMC meeting, the market tends to rise 1.5%, 2%. After, it tends to come back down 1.5%, 2%. Okay, the last 3 FOMC meetings, the market, after the announcement, did that 1.5%, 2% correction in 1 to 2 days. So the announcement's tomorrow. Okay, we still may see some upside going into the market until that announcement comes out. Upside and kind of choppy sideways, okay? What this is going to do is allow you, just like the banks and institutions, to protect, offset risk, and prepare for that potential correction, okay? Now, the correction may be very short-lived. It may happen in a few hours. It may happen over a longer period of time, but we have to prepare for it. So from the bigger picture perspective, looking for on the S&P, right about that 44.29, 44.30, if price goes to the upside. Right now, we're currently up over the 1.5%. We're about 1.8%. So even some sideways action would be kind of anticipated. So for the NASDAQ, we're already up about that 2.2%. And then if we're looking for that corrective move coming back after tomorrow, we're going to look for about that 14,704-ish, maybe about 14,900 range, okay? The Dow seems to have a lot more possibilities of the upside just before the meeting coming out. And it may be just a little pullback before the meeting and then kind of squeeze everybody out as it comes up into that selling territory, a forecasted area, okay? And then the correction coming back down 34.5 area, okay? All right, so some of our markets are opening. We're seeing some initial drops. On the NQ, I'm going to look for the opportunity to come in about that 15,077, right in that range, okay? We're seeing Tesla up, Apple, wow, Facebook taking a nosedive right here. okay? So with the equities pulling back a little bit here, you know, this lower level, just be patient and wait for it, okay? So I'm going to place a trade down here on 15,077. Come in at right about the half, okay? And then I have kind of a loose stop. Got 67. Yeah, that's just to give myself a little wiggle room after the open, okay? Now, I do plan on staying in this till it takes out the highs, okay? With the information that I just shared with you, okay? Now, the pullback this morning is also giving me an opportunity and to be prepared for the stock picks that I'm going to come in and look to set up some trades on, okay? And then I'll review a couple of the other ones. Let's get the S&P. S&P is back in that zone, okay? Let's see, we got Goldman Sachs gapping down, okay? And I'm going to take this as it comes back out, 43.95, looking to go long, okay? 90, actually it's about 96, okay?
Order filled.
Looks like we just got on the NQ. And let's see, we've got a 43.92. Okay, so that stops in the right place. And allowing myself to move to the upside, okay? Don't get sucked into trying to short this just yet. As reasons that Kaitlyn has already put out there, you know, taking a short trade as we're leading up to the economic, the FOMC meeting, may be a little more elevated risk, okay? And right now, there's no really clear setup to take the trade short. Bear trap, roughly about 43.71, 43.68, okay? Dow, Dow looks like it's taken all of that out. We had a couple of small 2 and 3 minute zones. Gonna take the Dow back up. Entry 34,850, okay? 34,850. I'm just going to take one contract on this. This is the mini contract, not the micros.
Order
Looks like I
filled.
missed that one there. Let's get. And
Order filled.
okay, looks like we're doing pretty good. I'm going to, you know, it's still an inside day, so I'm going to be prepared. I got a lot of things moving right here, as you can see up on top. Okay. And things are a little volatile, okay? As Kaitlyn was talking about, you know, a lot of volatility in the marketplace this morning. Now, I'm not going to let this trade go against me like that, but I want to give it enough wiggle room. Let's see what happened. NASDAQ. No trade on the NASDAQ yet. Oh, no, we got stopped out. Okay. NASDAQ going a little bit lower. Well, that's good for nat gas. I'm looking for nat gas to pull back. Talking about nat gas for a moment there. With nat gas, the last trade date is on the 28th, okay? Now, typically just before the last trade date, many of these commodities start to sell off as they sell the front month. And then right after the 28th, we're looking for the price to drop into a demand and then price moving back up. We've seen that on crude oil over the last, on the last trade date as well. Very similar pattern, okay? And this will be one of the strategies that we are currently doing some more research on in order to anticipate using the last trade date as potential trading strategy. The crude oil looking for a breakout above the 72.32. Okay, target larger time frame zone up about 74.36. Okay, looks like the Dow is going down a little bit further than what I would like it to. That's all right. jumping around a little bit too much, okay?
Ordered fill.
We have a high tight base right here. I'm gonna come back to the Dow and see where. Yeah, the next zone is pretty far away. Inside days, grab those quick profits, okay? Now we start cracking that Globex low. That bear trap, which was the London open in the overnight zone, about 34,690, 34,652, okay? Let me change this down here. Let's drop down to about a 3 minute. I just want to look inside this area. See if there's any opportunity here. If not, prices are going to drop down into the lower zone, which we could even refine just a little bit more here. Yeah, looks like we're starting to crack a little bit lower. Yeah. Let's take a quick look at the S&P. I don't need it to. S&P seems to be holding, but we're not getting any help from IBM and Goldman Sachs. Actually, it appears I may get stopped on this trade as well. Okay. Inside days are a little tricky. You can see that they're on the tick, small time frame, that there was a sell program that came in right at the open. As Kaitlyn was talking about the internals and putting some things together, we like to see that tick, the trend, the advancing issues over declining issues. Okay. Love our stops. We'll just wait for the lower zone to come into play. Doesn't mean the day's over. Okay. So let's take a moment and slow up just a little bit and jump over to some of our equity products and take a quick look at, we have HRI, which was a short setup a couple of days ago. Okay, that one is, I'm sorry, long setup. This one is continuing to move up with the trend. RPM, okay, our short setup is now working. And for those using the entry point software here, you would be adjusting your protective stop loss down. And should today's action close below the low, then your protective stop loss would be roughly below that area, okay? We had TTD, which was one of the picks that we posted yesterday. Looks like it has triggered this morning. AAP also triggered this morning. Twitter, looks like we've got a little ways to go. And this morning now we're looking at setting this one up. I got a couple of lower priced ones, so I'm going to place the order here to go long. View order bar. And I'm just going to use 100 shares. Buy stop market 7.98. And we'll come back in there. We'll place a single order long with an exit stop. So my exit stop is going to be stop market 7. I'll just go to 710. Okay. Confirm and send. All right. I'm sorry, I didn't have the chat up. 1 second. Chat was kind of hidden behind something, so let me bring that back out in front. Kaitlyn, feel free to break in anytime if I'm missing a couple of the questions here. I'm just in my zone looking for opportunities here. All right, S&P did stop us out. Inside days are really kind of brutal like that. We're starting to see the turn, and we're about 3 minutes away from that quarter hour, okay? We're also seeing that the tick is coming off of that sell program, and we need to be looking for demand. Down, we have prior sessions low, and on the S&P, this area down here, 4377, 4370 would be that bear trap and that buy territory, okay? And then we could look for the opposing zone, just back up at the origin of the drop, okay? In Q, still pulling back, but it looks like the equities have slowed up just a little bit, okay? We'll see that, oh, look, here they come. They're all starting to drop a little bit more. So let me open this up here. And we need to look somewhere right around in this area here. Now this is on a 15-minute chart, this is a pretty big zone. So we're going to be looking right in here, see if we can refine that zone. That'd be a great entry. Why are we still looking to go long? Okay, well, we still have some upside in front of that FOMC meeting. Okay.
Hey, Jeff, when you have a sec, could you take a look at Alibaba? You have a request for that one going back to the stocks.
Thank you. Yeah, I will do that. All right, so what I'm doing now is whittling down the time frame. And I use a leg base group of candles. As I'm doing that, I'm turning down the time frame, trying to get that exact picture. Because there might be something right up in this range here. So 9. Yeah, looks like we have. It's a wide zone. And for my trading plan, it's not about a time frame, it's about getting the right picture. And as I'm whittling down this time frame here, I'm looking for that right picture, which is the leg base group of candles. I also want to check this area out here. This one's, I mean, we've been here several times. There it is. I'd go all the way to 5-minute chart, find the next area. Okay, so let's go back out to the 15. Let's clean up the chart so it's not so much noise on there. And let's look for, we have that area right in here, but the other equity indexes have broken through that. It's almost like it's sucking in all the shorts, and it's going to use the shorts as it has the last couple of days to run the market back up. Fastest way to make a market move to the upside is getting the shorts to cover. Okay, we call that a short squeeze. So our next area, looking for price to align right around the quarter of the hour or the top of the hour. Okay, and right around that 15,017. Okay, yeah, it's already taken that out, and there's nothing else left in there. Equities are starting to bounce a little bit as we are seeing the index bounce. Okay, gold looks like it's coming back down to the origin of the breakout. So I want to look just right below in this range here. As I start to turn the time frame down, I'll come back. Well, don't be confused. Look, everything when it comes to an inside day is we're overly cautious. Okay? I'm looking for an opportunity where the banks and institutions are going to step in and run prices back to the upside as they have for the last 9 years with the FOMC meeting. Okay. So the FOMC meeting is my odds enhancer or my decision support tool to help me focus on the direction. Okay. So don't get confused by this. I'm anticipating the market to go up as it has the last few days when the market dropped in the pre-market and started to rally back up for the rest of the day. I mean, there were several times that we wanted to short and stay short. Everything was leading us to find a top and it drew us in. Now, the thing that we missed out on was knowing when the FOMC announcement was going to be and starting to anticipate that price movement. So hopefully that gives you a little bit more insight to that. Okay. Now, I will say this, with any person that you are looking to work with in trading is to understand their methodology and their trading style. Okay? Do not just randomly start taking trades just because the instructor's taking the trades. Often when we are an inside day, I'll look for some aggressive trades, but I won't stay too long. Okay? It's a little different environment. So back to gold, and I'm got about 5 more minutes and I'm going to switch it back over to Kaitlyn. Okay. So gold, let's start turning the time frame down, looking for that zone. As price is pulling back. That's kind of a wide zone on a 12-minute. The leg-based group of candles is basically we're looking for the leg in and some base candles. Now in this case, with this software, I put a little blue dot on every candle where the body is less than 50% of the range. Okay. Every candle that does not have a blue dot, it is what we consider a leg candle. Okay, so what I'm looking for is a combination of those candles where we have the leg in, a base, a leg out, and another base. Okay, and it looks like I'm getting into some small time frames. Wow, getting way into the small time frames. We're looking for that very specific group of candles to help us isolate that zone. No, not seeing it there. Okay, even down to a 1 minute. Okay, so back out to the 15. I have an area where I'm expecting a bounce, but the only zone I have is on a 12-minute chart. Okay, which would make the zone a little bit too wide and outside my parameters or what I'm willing to risk on a trade. Taking a quick look at the internals here, we're seeing that the trend is low, but it's not at that sell point. We saw the tick give a sell program right at the open. And we also see that there are more declining issues over advancing issues. Okay. The other thing to look at is we're still inside the prior day's trading range and the conditions of the market are a little bit bumpy, a little rough. Okay. NASDAQ still looking for about that 15,017, that first area where I'm looking for some buyers to step in. And as we approach the 10 o'clock hour, we need to prepare for that opportunity that if price intersects into that demand zone around that 10 o'clock hour, then we'll look for an opportunity to go long. Okay. Now you also got your stock picks in email this morning. So if you didn't check your email, go out and check it. I'm going to switch the mic back over to Kaitlyn. She's going to take us into some other active trading environment, active trades. And then we'll come back and we'll see where we're at on some of the trade setups that we're participating in. All right, back to you, Miss Kaitlyn.
Thank you, Jeff. Can you guys see my screen okay? I want to make sure I'm on the right screen this time. Okay, great. Thank you, George. So yeah, I wanted to go back to gold real quick. And typically once we start getting closer to the 10 o'clock reversal, that's where I'm going to be looking at the indexes to see if they're dropping into some of my zones, going to be looking for those buying opportunities, or if price is rallying at the 10 o'clock reversal, going to be looking for those selling opportunities. But as you can see from my charts, my zones are going to be a bit further away with, as I mentioned before, the expected volatility in the markets, with the FOMC announcement being tomorrow. Typically after the announcement is when we get that 1.5% to 2% pullback, but leading up to it, we can expect some volatility. In addition, with all of the stocks and earnings announcements coming up, additionally, we can expect volatility from the stocks and seeing more volatility in the futures markets as well. So my zones, with it being elevated risk today, are going to be a bit further away. We're still inside the prior day's trading range, as you know. So today's market conditions are going to be choppier, as we discussed in the pre-market routine. So make sure to understand that that's going to be the trading environment you're getting into. So if you're taking trades, just to realize that you are taking on that additional risk, and to either possibly wait for a more easier day to trade where we're seeing more of those trending opportunities, less earnings announcements coming up, and there's no FOMC announcement. Sometimes if you're a bit new to this, it's better to just observe and to watch the market conditions versus jumping into it and then getting stopped out with all the choppiness and market volatility. Because you always want to go back to the daily chart, which is your big picture overview of what's going on with price action. As you see those big moves on the indexes, you might get sucked into what's happening with price action and start wanting to buy and pick bottoms or sell at the top. But look at where we're at still on the daily chart. So all that's been happening, and we're still within the prior session's high and the prior session's low. So we're still in here. Price isn't really going anywhere, and we're not getting a clear sense of direction. So while we're still in here, that's why I want to bring it back to this with it being inside day, and we're seeing these crazy price drops or price rallies. That's because of this right now, and all the additional odds enhancers that we looked at in the pre-market routine that we want to keep an eye on and wait for things to calm a little bit. So right now, the main thing is that we're inside the prior day's trading range. So with this, we can expect choppier market conditions. Let's see, so it's 10 a.m. a key time in the minds of the institutions? Good question, Scott. So we've seen time and time again, we're at 10 o'clock within, I would say, 3 minutes prior. So 9:57 to 3 minutes after 10 o'clock to 10:03. Typically, that's where we see time and time again that price changes direction. So if price is falling just prior to the 10 o'clock reversal and coming into a demand zone, that's going to be a key opportunity to take that buying territory and to get in long. Or if price is rallying, coming up into a selling territory just prior or at the 10 o'clock reversal, again, that's going to be another odds enhancer to take that shorting opportunity. We've seen this in our classes where the ones where they do line up with the 10 o'clock reversal tend to work out more often than not, and more often than the ones that don't line up with the 10 o'clock reversal. So as far as, is it a key time in the minds of the institutions? I'm not sure what the rhyme or reason is, but I mean, just back testing it, and that's something you can do, is just go back on the charts and see what's happening at the 10 o'clock reversal. Also the quarter hours too is going to be another one to keep an eye on, where we've seen, again, time and time again, where price dropping into a buying territory. Then at the quarter hour, price changes direction, as well as price rallying into a selling territory. We see price often fall from that if it's on the quarter hour or the 10 o'clock reversal. The exact reason behind it, I'm not too sure, but back testing it, you can see it does happen more often than not. That's just a piece of information that you can take with you as you start to get more comfortable with your buying and selling territories, to see that if price is coming into those areas at the quarter hour or 10 o'clock reversal, those are going to be better opportunities to jump into, along with a lot of these other odds enhancers. As I mentioned before, keeping an eye on the stocks to see what they're doing. So price dropping down at the quarter hour and price is coming into a buying territory, and then we start to see the stocks rally after that. Another odds enhancer to want to get long in that trade. If we see the stocks going up, we see it's the quarter hour, price coming into a buying territory. You can really see how you can have just a checklist of things that you look at as far as, if you have your buying and selling territories, what are enough odds enhancers you can use to determine whether you're going to take it or not. And then going back to today, as far as why I'm not looking at the 10 o'clock reversal as much, just because my zones are farther away. The one that I'm keeping an eye on right now is going to be gold. I saw a question on that before, so just want to emphasize this as far as this zone or the selling territory right here. I know Jeff was looking at this zone down here. As the price is coming back, we might hit this one first, but also looking at this one up here as far as it being in a good location. I did see another question as far as the leg base. So just want to clarify that a bit as well. If you go to your day one slide deck, you'll see that slide on there where it has the general picture of what we look for with the leg base. And you'll see the selling territory looks pretty much identical to this right here, where the leg is going to be a green candle with the body greater than 50% of the range of the candle. That's going to be a leg. Then we look for a base candle, which is going to be this small one here, then a leg coming out, followed by another small base candle. So this is that criteria we look for with our territories, and then it's about putting them in the right location. So as you can see here, as I mentioned yesterday, we like to look for strong moves out of areas and then digging into the origin of those moves where we get the strong drops. So my eye gravitating towards where we have this big drop right here, what's at the origin of that move that causes price to fall. That means if you're looking to the left, there were a lot of buyers that came in here, here, and here. So 3 times the buyers were stepping in and holding price up, but ultimately there were more sellers, which caused price to go down. So it's about finding the origin of that move where potentially there's an imbalance of buyers versus sellers. We want to find where ultimately the sellers take control and take the buyers out. That's why I was digging into that area. Also, if you are a fan of trend lines, a good one to look for is that if you're measuring the trend and you can look for where is there a potential change in trend, also looking at the origin of those moves, where if we're trending to the upside and then we see a break in the trend, looking towards, again, the origin of that move that causes the break. So on gold, why I'm keeping an eye on this one right here in case we do pop up into it, is that taking my trend line drawing tool, you can see that at this area, this is where, again, the buyers were stepping in, where price rallied up. We found some buyers, so price continued to go up, dropped, but found some more buyers, a third time, a fourth time. So a lot of buyers were keeping up the market on gold and pushing it up. But then ultimately in the circle is the origin of that strong move to the downside. So that's where I was looking. This one was pretty simple on a 15-minute time frame. As I mentioned yesterday, time doesn't matter. It's all about finding the right candle formation and then putting it in the right location to see where is there the potential of an imbalance of orders. So gold, keeping an eye on here, as we did break this trend here, we had a strong move down, And then as additional odds enhancers, waiting to see if it was created on higher volume versus lower volume. Typically, territories that are formed on higher volume are going to have more institutional activity in them, and we put more emphasis on those ones. So taking all these pieces of information, it may seem like a lot, but it's all about once you start to get accustomed to them and use them over and over, you can see how you can use all these pieces of information to then isolate where your buying or selling territory is. So this is the one I'm keeping an eye on for gold. Again, at the bottom of my charts, I always have volume to see when the institutions are starting to jump in and move the markets. In the overnight sessions, as you can see, this is also where we see a lot more volatility because the institutions aren't involved at those points. So we want to see the institutions backing up these price movements at the points where our territories are being created and formed. So a lot of odds enhancers. Just wanted to explain this one on gold. Jeff was looking at the one down here at the origin, again, of this move to the upside. So you can see here, this is the origin of this move to the downside, and then the origin of this move to the upside is going to be right in here where Jeff was looking. So now once you map out both sides, you can see, okay, the sellers are up here, the buyers are right here, and currently price is right here, still in the middle. So versus trying to jump into trades, waiting for price to come to where potentially there's those unfilled orders at the origins of these strong moves is where you're going to want to just wait for price to come down into them. So gold's the one I'm keeping an eye on. Let's see. My TradeStation looks completely different than yours. See, I'm using Thinkorswim. I know Jeff is using TradeStation, so that might be why. I think our setup should be pretty similar as far as how we have them laid out with the futures markets lined up with the stocks. But these are the layouts as far as looking at the indexes and looking at the indexes as a whole, comparing them with what bonds are doing. You got the internals, the pre-market indicator. So it's really just each morning, you want to be prepared for the day, going through your checklist of, okay, what's the S&P doing? What's the NASDAQ doing? Are they correlated? What are my internals saying? And draft your own checklist and start to work on it. See how price moves during the session and see how you can stack as many odds in your favor when taking your buying and selling territories. So where's your sell order on gold set in the 15-minute? Oh yeah, so good point, Scott. I'll go back to gold real quick. So on this one, the selling point, so this is that zone or that territory criteria that we were looking for with the leg base. And again, if you want to just see that again, that's going to be on your day one slide deck. But the entry on this one is going to be at the open of this candle right here. So where we have this base candle, the open is 1807.6 would be your entry. And then your stop, I always put mine a tick or two above the distal line, which is going to be right up here. And that's going to be at 1809.9. So just a tick above that. You've isolated your selling territory. And now just in the meanwhile, waiting for price to come to you. Thank you, George. I appreciate that. So I'm going to pass it over to Jeff now. We'll take a quick recap, see some of his trades, and then we'll go from there. So Jeff, I'm going to pass it back over to you.
All right. Pass the host to me. There we go. All right, so let's jump right back in. Let's see. I need to share my screen. One moment. Is my screen sharing? Okay, good. For some reason it didn't have that bar around it. When I stepped away there, I did come back in and I set up a couple of the stock trades as looking for a buy stop market. The ones I did set up were the ARLP, not yet triggered. Entry at 7.98, stop 712. Okay. The other one that I took was SBH. SBH trade is set up, has not triggered, 22.94. And the last one was Zen, also looking for a break above 151, and then looking for a projected target 163.85. Okay, these three have not triggered yet. Okay, now as we're getting just after the top of the hour, the Russell did come back into a zone, and I did execute on that. Okay, it's not coming. It came out of that. I was up a little bit on it, and still just waiting for the overall equity indexes to start moving back to the upside. Okay, and you can see that we're taking a little extra risk right here on the trade, in as much as that you know the entry point is also showing us that things are very congested. Okay, let's see, the internals just been hanging out. We're starting to get back up into that more of a neutral territory on the tick. Now, once it triggers a sell program, okay, and that's when price gets down to that extreme on the tick. Okay, when it's over is when it crosses back above this area here. Okay, and once we get into a buy program, when it's over, it crosses back down to the 400. Okay, let's see, on the S&P, we're still right in that choppy area, but we can see that the the equities that make up this large market cap weighted IBM and Goldman Sachs are starting to show an uptick in the last couple of moments. Okay. And we're still seeing on the NQ right now, it just came into that zone. Okay, I'm a little bit early.
Ordered fill.
And let's get this one here. I got a wide zone on this, so I'm chasing my tail here, 93. Adjusting my stop down to the distal. And now I'm just waiting to see a little more confirmation where we can start to get a bounce on Apple, Tesla, Microsoft, Amazon, and Facebook. Okay. I'm just looking for price to come back out of that area. Okay. Now I'm taking a little extra risk. We have broken outside of the prior day's trading range, so we're no longer an inside day on the NQ. If you're new to this, you may take a confirmation entry about 15,719 as 15,017. Okay. Markets are a little bit volatile. Now the best opportunity is going to be right around the quarter hour. I'm going to be taking some heat for about the next couple of minutes there. Okay. So watch these areas. If you choose to be a little more aggressive in trading, then you're going to take the additional risk on these. Okay. And we'll see, I'm not getting any help. Now notice how we're using the equities over here. They haven't started to turn back up, so I'm kind of sweating this out. Okay. Just sweating it out. Now, what I'm watching for is looking for when we see them start to turn, and then you can jump back in. Again, 15,017, a more conservative entry if you're not willing to take that risk. Okay. Markets are pulling back, and it looks like we're getting some liquidity issues. Okay. Gold, still kind of hanging out. I have moved to the December contract on gold. Okay. Crude oil, still waiting for a break above 72.33 and the opposing zone. Now, as somebody saw I still have that 15-minute sell territory up here on gold. That's the same area or same zone-ish that Kaitlyn was looking at. Okay, so if you looked at a higher time frame and your trend is, you assume the trend is down or assume the trend is up, however you analyze that, you would be looking to sell short around that 1811, 1813, or looking for the opportunity to go long between about 1802. Now, let me caution you on going long down in this range as we come back and look at this whole area being used up, okay? The price coming a little too deep into that range could break and look to move a little bit lower. Lower buy territory, about 1763, 1757, okay? Now I've got about 3 more minutes that I'm taking heat on the NQ, and we'll come back to that in just a quick moment.
Ordered fill.
Inside days are a little difficult. Now, I don't mind showing you that I get stopped out of a trade. Okay, that doesn't ruin my day. It just tells me I'm managing the risk. Okay, look, if things are not going to go the direction I need them to go, then I need to get out of the way and I need to manage that risk. We're approaching the quarter hour. We've got a really large demand zone. Now, this is the zone down below here, okay, that was formed in an overnight session. Watching the equities over here, they're dropping. They have not started to turn as we are seeing the NASDAQ futures pull back into this, right? I start to see a slight turn on Facebook. Amazon pulling back pretty sharply. As we're right there approaching that quarter hour. Wait for the stocks to start to turn now. I've already taken a stop on this. My net drawdown is about $200 on the about $200.50. So I will make that up in a strong move back out of here. The opportunities that we took earlier were still valid. And you can also see that the drop, as I mentioned, liquidity, using the matrix here, you can see that this drop is on very, very light volume, almost like an exhaustion as price continues to fall, looking for where some of the big players have those unfilled orders, right? Right there on the quarter hour where we should anticipate a change, yet the stocks have not made that change just yet.
Hey, Jeff, real quick, would you mind mentioning how you decide on the bear trap?
I'm sorry, say that one more time.
So you have the bear trap right there. We just have a question from Susan. If you could elaborate on how you found or identify the bear trap.
Well, generally the bear trap is below the Globex low, but it's close to where we have the daily ATR, okay? So there could be, I didn't like this bear trap simply because of when the zone was formed during the London session, the overnight, okay? So I chose to use one that was a zone that formed during the regular session versus a zone that formed in an overnight session during the London time. So this is where the strategy that I'm bringing into play here is often right around near the daily ATR is where we find that extreme move. okay? And there's a certain range around the daily ATR that traders can use as well, okay? Looks like the markets are starting to slow just a little bit, but the stocks have not yet. Tesla's starting to make a little bounce. Amazon still heading lower, and Facebook diving, okay? All right, so again, just a little bit more volatility as I'm starting to watch the equities, continuing to watch the equities. I really want to participate in this move going back to the upside, okay? And to do that, I'm going to need to see the stocks start to bounce. The charts you see over here, these are, I keep them on about a 3-minute chart. You can see up on top there. Now, if I'm really hunting for that turning point, I will drop down to a 1 or 2-minute chart. I was starting to see that turn. Again, it's going to be a little more elevated risk. We're a few minutes before the bottom of the hour. Okay, but you can start to see as the stocks turn first, then we'll look for the futures to turn following it. Futures always follow, they never lead. And all the trend following indications are still are quite bearish at the moment, and a couple are mixed. It's going to take a while for the trend to be reestablished back to the upside. Okay. Stopped out of a couple of trades, starting off as the inside day. But that doesn't mean my day is over. All right, starting to see the stock starting to turn. As you're starting to see a little bit of a turn on the equities here. The stocks that I went long are still just waiting out there. Buy stop markets were set with a stop loss. Now, these are daily charts and they're a trend following, okay? GBP Singapore dollar, I think that one was on a smaller time frame. Let me come back to that. GBP SGD. Now that one did trigger on a 480-minute chart. Same setups, same information for trend following, okay? Yep, let's do a real recap. And I did see several questions in there asking more about the leg base, about the pre-market routine and those pieces of information. I do want to point out, you know, some of the things that we do share in this room here, like the monthly subscription to come in and work with live trading, okay? The other is the daily stock picks, pre-market routine course. Now, this is what Kaitlyn was going through today as a demo, okay? She didn't get into the teaching, okay, on how to put all of these things together. Now, the teaching does take a little bit of time, so we know what each thing is. What's the tick? What's the trend? What's the VIX? What is a leg base? And so on, okay? Pre-market routine course content. We talk about news, economic events. This is really a short, well, 3-hour class, but you're going to see once you do complete the course that you will start to really connect with how Kaitlyn gathers the information to help us understand the trading environment. And the trading environment is so big of a key piece of information to be part of. We also have a small course, just a couple hours, just to show you the leg base, and talk about that, okay? Now, all you have to do is click on the links and you guys can get the information and the details on how to be part of that class, okay? And in summary wise, as far as what we've done in the classroom, Kaitlyn, you want to come back in and summarize some of the things that you put into play today as far as your trades? And then I'll wrap up our session here with what trades that we have taken. And hold on, gotta find all my stuff here. I'm coming for you, hold on. Okay, now you should have all the privileges out. Okay, good.
There we go. Yeah, so quick recap of everything you saw. I wasn't jumping into many trades today, mainly for how we first started out this session, and just want to reiterate it because on days like this, you can get stopped out more than often. And our goal is to get you into some of the best trades possible, the ones that have the highest probability opportunities of working out. So understanding, as Jeff mentioned, that full pre-market routine is going to prepare you for the trading day, as well as stacking all these odds enhancers in your favor that we've been talking about. So today, again, just the reasons why I wasn't jumping into as many trades is we talked first a bit about the economic reports and how the FOMC announcement is tomorrow. So we are anticipating that pullback to happen after the announcement. Also, with the earnings announcements coming out and all the stocks, if you go to Yahoo Finance, I don't know if I showed this yet. Yeah, going over to Yahoo Finance, you can take a look at their earnings calendar. So you can see that today there's 188 earnings coming out. So a crazy amount today. And as well as tomorrow and Thursday, you can see right here, we have 246 tomorrow and 260 Thursday. So I don't know about you, but all of these earnings coming out, if the stocks are going to be moving, we know the futures markets are going to be moving as well. And that's what's going to be causing a lot of this volatility. Also knowing that we're still inside the priorities trading range, this is not the environment that you want to be seeing. Oh, can you not see my screen? Here we go. I think you guys can see it now. Yeah, so here, good to go. Okay. Yeah, so here, Yahoo Finance, and then going to their earnings calendar. Again, looking at the top. Okay, awesome. Yeah, right here it shows you the events calendar for the week. We could see today is here where it shows 188 earnings. So I want to emphasize this as you're seeing for my zones and opportunities to buy and sell are going to be further away. Knowing that all these earnings is what's going to be causing a lot of volatility in the markets. Be safe and don't jump into the buying and selling territories that are necessarily close to price. You want to stack, again, as many odds in your favor and choose the zones that are further away, the ones that are formed on higher volume during the regular trading hours, and understanding the right picture of where you should be placing your correct buying and selling territories. So 188 earnings. Overall, just want to make sure you know that a lot of volatility with the stocks, and again, is going to be impacting the futures market. So S&P is going to be more volatile, the NASDAQ especially, tomorrow, Thursday. So this week, overall, expect more volatility with everything coming out. If, again, as I mentioned before, if you are brand new to trading or just kind of getting started, this is going to be a great week to observe versus actively, trading, or stick to the simulated account. You can place your trades and see and observe how they pan out. So definitely would suggest the simulated until you get comfortable with understanding how the markets move in these more volatile circumstances. So as Jeff mentioned before, this is something that we do a deeper dive on in the pre-market routine course, as far as understanding and creating that checklist as far as what you should be looking at. Today we start off looking at the news, economic reports. Inside day, we mentioned looking at the correlations, but there's a lot of other strategies we also look at to tie into what the charts are showing us. So there's actually different strategies we use for inside day versus outside day, some other indicators here that we look at. So the course is a great way where if you are still getting a feel for the markets and you're not sure how to prepare for the day to get the most out of it, this course is going to be great for you. So just keep that in mind. And then also I saw the questions asking about the leg base. That's going to be another course that we're offering as far as getting an understanding of what the leg base actually is and how to put it in the right areas of the chart so that you can, again, stack the odds in your favor and get the highest probability opportunities. So those are the ones I wanted to touch on. Jeff, do you have anything else you want to discuss? Pass it over.
Yeah, let me grab my screen back and then we'll do a quick little wrap up.
Sounds good.
Okay, I did take another poke at the NASDAQ here as we're starting to see the stock starting to climb out of that. Okay, still a little elevated risk coming into it. And of course, right before the FOMC meeting, we're going to be anticipating that elevated risk time frame, okay, or that elevated risk coming into the markets. The leg-based course that we were talking about there is a lead-in to what we're going to be showing on the active income. Okay, and the active income, when we have specific market conditions, we will look to take some really active short-term trades, almost like scalping, grabbing 50 to 100 bucks. But we do need to show, what is the group of candles that we're looking for, and not necessarily will we be, I'm not going to get into the breakout trades. That course is copyrighted under another entity, okay? So I can't infringe on that. But the leg base, we can get into and talk about, and we can use it with what we have here at as far as an active income type strategy, okay? Now we have a lot of things in play and a lot of things coming out eventually, okay? Right now what we have to offer is what we've just put out there in the prep screens there, okay? So take a look at those. Everybody should have a copy of that. As I come back and summarize some of the stocks, I'm just waiting for the markets to take these stocks back to the upside. I may take profits on a lot of these as I'm anticipating a market. I'm anticipating that pullback after the FOMC meeting, okay? All right, so I'm all finished up. How's your day going, Kaitlyn? Are you still waiting for trades and ready to wrap up?
Yes, and then just saw a question. Can you explain the blue dots on your trade station? I believe that was referencing the tick charts that you were looking at. You just want to mention what those are?
Okay. The blue dots just train my eyes to see things a little bit faster, okay? If I look down here, I see I have a leg candle, body greater than 50% of the range, and then we have base candles. Now on TradeStation here, if I go to Insert Analysis Technique, go to the tab, it says Show Me, and I click on the Doji tool, okay? as I modify this, I use two types of candles. One is a leg candle, body greater than 50% of the range, and then a base candle, which is the body less than 50% of the range. Okay, so when I change the inputs to 50, okay, and I change the color to a blue dot, basically it's putting the computer program is putting a blue dot on every candle where the body is less than 50% of the range. Okay. Thinkorswim does have this option, and Kaitlyn does have that. If you want to walk them through that now, or take a minute, or if you want to wrap up.
Yeah, let's do that tomorrow as far as
All right.
setting that up. And it's definitely a good tool to add onto your chart. So if you guys have Thinkorswim, I can walk you guys through that for setting it up.
Awesome. All right, we'll wrap up our session for today. Everybody, please trade safe. We got a lot of volatility, a lot of crazy moves in the market right at the moment. And I am anticipating price to go back up by the end of the day, okay? As we start to look for that 1.5%, 2% move up before the FOMC, and then after, we're looking for prices to come down. But as Kaitlyn pointed out, there's a lot of earnings coming out the next 2 days, which is going to create a lot of this uncertainty and volatility. We'll see you out tomorrow, and look for the prep screen to come out just before our session starts, and we'll wish everybody having a great day.
Thank you, everyone. I'll see you all tomorrow. Have a good day.